Welcome traders. Today I want to share something very personal with you. In 2008, I lost my entire trading account in 1 week. Every single dollar gone. And the reason why, let me tell you, it wasn't because I took bad trades. It wasn't because my analysis was wrong. No, it was because I followed the textbook. Buy when RSI is below 30, sell when RSI is above 70. That is what every book, every forum, every YouTube video told me to do. So I did it, and the market ate me alive. You understand? For weeks after that, I couldn't sleep. I would lie in bed staring at the ceiling, replaying every trade in my head. How did I get this so wrong? I did exactly what they told me to do. That week almost made me quit trading forever. I would lie in bed, staring at the ceiling, replaying every trade in my head. How did I get this so wrong? I did exactly what they told me to do. That week almost made me quit trading forever. But it also taught me something that changed everything. And that is the reason why I'm making this video today. So you don't have to lose your account like I did. Let me take you to the screen so you understand exactly what happened. Look at this Euro USD. 1 hour. RSI crosses above 70. Textbook says sell. I sold. Look at what happened next. The next 4 candles straight up. 120 pips against me. Stop loss gone. That is the reason why I say overbought does not mean overpriced. Let's check another example. GBP JPY, same thing. RSI above 70. I sold. 90 pips up, and you know what I did? I doubled down because RSI was even more overbought now. Worst decision of my life. You understand? Now let me show you the buy side. XAU USD, that is gold. RSI below 30. Textbook says buy. It is oversold. It is cheap. I bought and the market kept dropping. I thought I was buying a discount. No, I was catching a funny knife. Trade setup like this, account is gone. The textbook doesn't tell you one thing. In a strong trend, RSI sits above 74 hours. You understand? Every time you sell, you are betting against momentum, and momentum always wins. What if overbought doesn't mean overpriced? What if it means strong? What if RSI above 70 is telling you to buy, not sell? So I tested it for months, and what I found changed everything for me. Here is the rule. One condition, that is it. When a candle closes on the 1 hour and RSI is above 70, I buy. When a candle closes on the 1 hour and RSI is below 30, I sell. That is the entire entry. The candle close confirms the momentum is real, and I go with it. Let me show you how this plays out. Let me show you another example. USD JPY candle closes, RSI at 28. I enter short. Look at the drop. Now I have to show you this one. Candle closes above 70. I enter and it reverses. This happens, you understand. About 4 out of 10 trades look like this, but here is the math. With 2 to 1 reward to risk and a 55 to 60% win rate, I can lose a 4 out of 10 and still be profitable. If your entry and exit probability is above 60%, that is how you beat this market. You don't need to be right every time. Now, we have to talk about trend filter, when not to trade. Look at the charts showing trendy versus choppy markets. Now, here is where this method fails, and I want you to pay very close attention to this. When the market is ranging, when it's just bouncing around, RSI is above 70 means nothing. You get chopped. You understand? So before I take any trade, I check one thing. Is the market actually trending? So you have to check higher highs, higher lows, and marked with lines. First, I look at the last 10 candles on the 1 hour. You can look at even more candles backward. Is price making higher highs and maybe higher lows? And if it is yes, then the trend is up. Then I only take buy signals. Very simple. For downtrend, lower highs, lower lows. You mark it. Lower highs and lower lows. If it is confirmed, then the trend is down. Then you short only. You enter for sell. Now, anytime you see the price bouncing between the same level, now look at this one. Price is zigzagging. Same highs, same lows, no clear direction. When I see this, I close the chart. I don't trade. The best trade is sometimes don't trade. The difference between a gambler and a trader is knowing when to sit on your hands. I wouldn't wish what have happened on anyone, but let me tell you something. If I hadn't gone through that, I never would have questioned the textbook. I never would have flipped the strategy. The market doesn't care about the textbook. It cares about the momentum. Trade with it, not against it. And always remember, we keep learning in trading every day. What works today may not work tomorrow. And that is why you have to consistently continue learning and making sure you are updating your strategies. And if you want anything related to Forex robots or any backtesting strategy, you can check the website forexdominance.com. I can also create a robot for you. I do that for a living. I create trading robots. I create tools. Until you see my next video.